if you look at your amortization table, the payment that they will receive within the next 12 months, remember, will be this 18 million. Therefore, the short-term portion will be the 9529353 because they will receive this within the next 12 months. Guys, if you look at your journal entries, sure you understand this. We will credit our gross investment with an 18 million, and we will debit our unearned finance income within the next year with this 8470647. Therefore, the net effect on our net investment will be then 9.5 million. Therefore, this is what our line item should be at the end of 20.17 for the short-term portion, and this is the 9529353. Just check that this is right. Yes, look at the yellow, guys. It's right. Happy. Okay. What is the long-term portion? The remaining amount to be received. Therefore, the remaining amount will be the capital, the outstanding amount, 95492,561. Okay, you with me? Now, we are able to identify the difference, right? And this is pretty easy. The difference is 8470647, and this is 29507,439. Okay, now this is our 1 January 20.18 correction. Now, I am still busy with this. I prefer to complete this as I am within the thinking process. Okay, so now for the end of 31 December 20.18. Remember, we need to correct that year end. End of 31 December 20.18 as per IS 8. Okay, again, when you look at our timeline, if you are standing here, end of 31 December 20.18, for the next 12 months, we will have the 18 million being the short term. Therefore, very similar to our previous calculation. We have the short term, and this is our 18 million. We have our long term, which will be the 18 million times 4 now. Why times 4? Because when you look at our timeline, if you're standing at the end of 20.18, remember we move 1 year, we have included the 18 million for 20.19. We will have 4 years remaining, 8 minus 4, therefore times 4 years. And we need to remember our balloon payment of 35 million, therefore plus the 35 million, and this will be an amount of 107 million, right? And now we need to refer to our amortization table. Remember, we are now at the end of 20.18. If we are at the end of 20.18, we expect to receive capital of 10297,952. We expect to receive this within the next 12 months, and this is the 10297,952. And our long-term portion, you look at this, the long-term portion will be our 85194,609. So this is 85194,609. Happy. Okay, we can include the differences 7702048 and 21805,391. Right, okay. Now guys, important. We are sort of finished with our calculations. But at this point of time, I prefer to look at my note and include my note from the top. And then it's easy for me to identify what will have an effect on my profit and loss and what will have an effect on my statement of financial position. But before we do this, let's first include our description of the error. Right, I've included my heading, Medical Equipment Limited, notes for the year ended 31 December 2019, prior period error. Okay, now look at this. During the year ended 31 December 2018, fraud was detected in the ventilator division in respect of the accounting for a finance lease contract. As a result of the fraud, finance lease debtors and the related revenue were not discounted on initial recognition. Further, initial direct costs were recognized as property, plant and equipment and were not written off as an expense when the selling profit was recognized. The error has been corrected retrospectively. Therefore, guys, it's important to identify that there will always be marks allocated for this. The fact that you need to identify how to correct the errors. And then you need to indicate what happened and when this happened, right? So you need to mention here that we have identified that there's fraud, when did this happen, and how this will be corrected, right? Okay. Now, we need to focus on our profit and loss line items that should be corrected. Now, when we look at our workings, okay, remember, when you look at your workings, our profit and loss line item, I'm going to make use of pen, guys, on your timeline, will be for this movement. Okay, you with me? Therefore, we won't have anything included here on 1 January 2018 because this is for the year. Therefore, we need to identify the errors for this year, and you will remember that they have indicated us when you look at our journal entry that they have recognized depreciation of 50,000. Therefore, we now need to take this out. We need to take out the depreciation. This is in our profit and loss. If we take this out, our other expenses will decrease. We will credit. Therefore, in our note, we need to include here that there will be a decrease in our other expenses, and this relates to the 50,000, right? Now, when we look at our workings, what should they have done? Look at our journal entries. If they recognize a finance lease, they should have credited finance income for 20.18. They should have recognized the 20.18 finance income. Therefore, when we look at our amortization table, look at your amortization table, they should have recognized the finance income 8470647. Okay, therefore, in our note, this will be an increase in our finance income to the value of 8470647. Okay, now when we look at our workings, guys, I'm not able to identify any other amounts that should be included in my profit and loss. Therefore, we are able to identify the effect on our income tax. Now, when we look at this, our calculation, our income should increase with the finance income. Therefore, our income should increase with the finance income. Our other expenses will decrease, but this is a credit. Therefore, this is a credit and a credit. Therefore, this is an income. And if our income increase, our tax will increase. Therefore, this will be an increase in the income tax expense. This will be the 50,000 plus the 8470647, and we times this by the 28%, and this is an increase, but guys, remember it's an expense. 2385,781. Let's move on to our effect on our statement of financial position. Okay, so guys, first, you will remember that they have indicated to us, when you look at the left side of your screen, that they've capitalized this 500,000, which should have been expensed. Okay, therefore, if we are now standing at the end of 20.17, we still have 400,000 of this in our PPE, which is incorrect. We need to take this out, statement of financial position. If you're standing at the end of 20.18, we have the 350,000 still included in our PPE, which we need to take out, statement of financial position. Therefore, immediately I will transfer this to my note, which will result in a decrease because we need to take this out. This is a decrease in our property, plant and equipment. Now remember, please write this out. You cannot use abbreviations. Okay, and this will be the 400,000 for 1 January 2018 and for end of the year 350,000. Okay, so guys, important, we just need to indicate here how do we calculate this. Remember, it's your 500,000 minus the 50,000 minus the 50,000, right? We make use of an abbreviation in our note in terms of the calculation, therefore indicate that this, okay, represents 000. And then the 350,000 will be the 400,000 minus our 50,000. Okay, now let's refer to our workings. Next, what have they done in terms of our statement of financial position? And you can follow me with a purple here. Okay, debit bank, credit trade receivables. Okay, we have corrected our PPE, the depreciation. What they should have done, guys, we should have included a net investment, the short-term and the long-term portion. Therefore, when we look at our 1 January 20.18 details, the difference is our short-term portion will decrease or increase, guys. Our short-term portion will decrease. Look at this. Why? Because it was 18 million. It should be the 9,5. Therefore, there's a decrease in our short-term portion. Okay, you with me, guys? In our note, we need to indicate that there will be this decrease. Let's say decrease in the short term. Please write this out, guys, otherwise you're not going to get your communication skills marks. Short term net investment, or you could have used finance lease data, and this will be a decrease to the value of 8470647. Guys, the same principle will apply for your 20.18 year end. Remember, when you look at this, it was 18 million. It should be 10,2. Okay, therefore decrease of 7.7 million, right? You can include this. It's a decrease 7702048, right? Okay, important, we need to indicate where did we get this, and I'm going to reference this A on the right side, guys, and B, and in my note I'm going to indicate calculation A, calculation B. Next, now we need to identify the effect on our long term. Okay, when we look at our calculations, our long term again also decreases, guys. I'm going to make use of green. Look at the right side. There is a decrease of 29.5 million. It was 125 million, and this exceeds the 95.4 million. Therefore, there's also a decrease. The same principle applies with our year end. It was the 107, and it should be the 85.2, and therefore there's also a decrease, and we need to include this. I'm going to reference C and D and transfer this to my note. I have transferred this, guys, included my line item decrease in the long-term net investment. Please write this out. I've transferred the 21.8 million and the 29.5 million. Right, now, important, our deferred tax. Okay, but I want to explain this to you by means of our deferred tax calculation. Okay, when you look at your screen, you will identify that I've included my deferred tax calculation at the bottom. Now, what I want you to remember is when you refer to your IFRS 16 revision pages, you will remember that when we have finance lease, the net investment amount in terms of the carrying amount will agree to your tax base, right? But what we are saying here is that we now adjust our carrying amount in terms of our net investment. We decrease this carrying amount. And let's say, for example, now, our tax base is 0 because they're not going to open this now. This will correct within time, but they are not going to open this. Therefore, we decrease the liability. Therefore, our liability will be less. Sorry, we decrease the asset. Let me just write this out, guys. We decrease the asset. Therefore, the asset's carrying amount will be less than the asset's tax base. If it is less than the asset's tax base, if you refer to your IS 12 principles, you will remember that we will recognize a deferred tax asset. Okay? Therefore, you will identify the totals. I've included calculation A, the 8.4 million, and I've included calculation C, the 29.5 million. Look at the left side of your screen. And this is a total of 37978,086. Therefore, the decrease in our asset, negative, okay, it's less than the tax base, our carrying amount. And this will result in a deferred tax asset. Same principle will apply in terms of the PPE. The 400,000 decrease, no effects on our tax base, right? And this will be a deferred tax asset. Therefore, we need to indicate in our note that this will be an increase in our deferred tax asset, and we have calculated this here at the bottom, guys. Therefore, we can include the total of the 400,000 plus the 37 million, and we need to times this by 28%, and this will be an amount of 10745,864. 10745,864, right? Okay. Same principle will apply in terms of our year end for 20.18. We will have to add the 350,000 plus the 7702,048 plus our 21,805,391, and we need to times this by 28%, and this will be an amount of 836,083. Right, okay. Then we need to remember to include the net effect. Please don't forget this, guys. If you're not sure what to include in your disclosures, please ensure that you have highlighted, underlined this properly, please. Okay. So the net effect relates to a decrease in the equity. In terms of the retained earnings for the year in 20.18, we have a decrease of 214,97356, and then for the year in 2017, which is our opening balance 2018, we have a decrease of 276,32222. Therefore, guys, are you with me on this one? Therefore, the decrease in terms of our retained earnings on 1 January 2018 will be the 27.6 million. Okay. I think this was a little bit difficult though, hey guys? Please work through this. When you have questions in terms of errors, identify your steps. What should they have done versus what they have done? Identify the effect on your statement of financial position and your profit and loss.